if you think about the environment in which we've grown up, it has a huge impact on our brains. So our brains are about twice as sensitive to losses and danger as they are to opportunity and gains. So think about what we've been through. 2 terrible stock market crashes, 40% or more, a housing crisis, which brought financial ruin to a lot of those that we love. So we have this impression and very low level of trust for the stock market in general. We've preferred very so-called conservative things like cash. So if you look at millennial portfolios, again, we're in 20s and 30s, so it should be pretty aggressive, but it's about 50% in cash, depending on the survey you look at.
Okay, so do you think it changes? And if it does, what is the tipping point?
I think it will have to change over time. I think that slowly millennials will build trust in the stock market as they start to see the long-term returns be more successful. I mean, even after a remarkable five-year bull run, still a ton of skepticism. There was a portfolio survey out the other day that said 1 in 4 millennials trust no one when it comes to money. So it's still there, that skepticism, but I think it will abate over time as the market continues to do well in the long run.
Okay, different question. Do you think that young people will ever be calling up their brokers on a daily or weekly basis saying, buy this, sell this, do that, I just got research on this, sort of my grandfather's generation, actually, who literally, I mean, maybe they won't be on the phone, by the way. Maybe calling your broker isn't what you do, but going online and doing it then.
Well, I hope not, because I think that that kind of activity is actually very bad for long-term returns. One of the things I talk about in the book is a focus on really automated solutions, that a lot of investing should happen behind the scenes without you knowing it, because typically when human beings get involved, bad things happen. You're supposed to buy low and sell high, but we tend to do the opposite. So hopefully not. Hopefully it will be with a lot of these interesting new companies that automate the entire investing process.
Do you buy those who automate this whole thing? I mean,
yeah, I do.
Not just the old traditional companies that have sort of not just buying the index. But those who you go online, you tell them some of your characteristics, and then it's sort of off to the races.
I think that that solution, while not perfect, is better than a lot of the alternatives, which is individuals going out there and trying to pick stocks. Because that's very, very hard to do. We know how hard it is to beat the market, even for professionals. So I do think that this is an improvement, a better solution than individuals just picking stocks for themselves. One of the problems is that millennials tend to think of risk as in black and white terms as absolutes, but risk is a relative concept. Risk can only be evaluated relative to one's time horizon. So we're very young, so risk for us is very different than for someone that's 50, 55.
If you could go into equities long term when you're young, that's the way to do it. That really is. You do the rule of 72 on any type of return. Even a conservative return, and suddenly you've actually got something.
And that's a big part of the reason for the book is that there's just a lack of education. I took 4 years of French and photography in high school, didn't spend an hour learning about these basics about compounding and the power of time in the market.
So how much do you worry, though, that this millennial generation, when retired, actually won't have enough to live because they won't have actually
But how is that any different than the baby boomers or any other generation? You think this generation is worse off, or you think this is just the coming of age that every generation goes through?
I think that there's some of that it's every generation goes through this same process, but I don't think they're any worse off than baby boomers were. I just think that it's good if we're more financially self-reliant because there's nothing bad that can come of that.